Man, I am stoked right now to say the least. The last few days I have been getting fucked in price action, and it has not been price action's fault, it's been my fault. And I have been slightly tweaking my strategy and not sticking to it religiously like we should be in our trading. And today I did the opposite. I stuck to it completely religiously. I was like, oh, it was one of those situations where you can sort of tell where price wants to go, and your daily bias works with the setup that's been given. However, not all of your confidences have been ticked, type of thing. It was like yesterday, I ended off of a 15-minute bearish fair value gap with a 15-minute bearish reaction candle, when usually I would wait for a 5-minute confirmation candlestick when the 5 minutes broken structure to the upside to fill in that imbalance. And I ended up getting stopped out because of some crazy candle, but deep down I know that it's my fault for entering when I should have waited for a 5-minute confirmation candle. Even though realistically that is still a solid entry and there's nothing wrong with that entry. I guarantee a lot of people would trade that exact strategy. But yeah, so anyways, today I will jump in here and show you how I have... Okay, so coming into today's Asian session, I saw potential for trades in both directions. So I was keeping it pretty open-minded, if I'm being real. And I knew that we were sweeping, that we'd already swept this low here, so I couldn't count that as a liquidity sweep on market opening. And the strictness that I applied in my trading today was that this is not a low. And on the candlestick previously, this had been looking as though it was going to set up for a low until we got this big bearish move just before the hourly candlestick closed. Now, a low in my definition is a move down followed by a move up, and this is obviously just 2 moves down. So I had this marked out as sell side liquidity, which is technically what it is. However, when market came down and swept it, I didn't take the entry off of this break of structure, which we saw here on the 5-minute time frame. And then we had an equilibrium retracement followed by a bullish candlestick closure. And this could have been potentially where I screwed up. However, today, stuck to the plan religiously, and I knew that this technically was not a liquidity sweep in my definition of it, because this was just... this wasn't an hourly liquidity sweep when we didn't have an hourly bearish candlestick followed by a bullish candlestick, and then we didn't have an hourly low. So anyways, I saw this. I would have been a TP1 at this hourly high here, TP2 at this hourly equilibrium. And I was sort of looking at it today thinking that we have decent buy-side liquidity sitting up here that we could be looking to come up, balance out price action a little bit. And yeah, but however, stuck to it, and we did see a couple bullish pushes up. I think that was just filling in this intraday gap, and then price reverse. So looking at this, super stoked that I stuck to my trading strategy to the T today, because the last couple of days I got completely cooked. I'll show you the loss that I took yesterday. Jeez, what is that? This was during the Asian session as well. This was an hourly high here, and we had a 4-hour bearish fair value gap here. So I was playing it off of a 15-minute time frame. We broke structure on this candlestick closure here. We got a retracement into this 15-minute bearish fair value gap, and then from here I entered a short position off of this candlestick with a pretty tight stop loss, to be fair. I had my stops sitting, I believe I had them sitting there. TP1 there for a 1-to-1, TP2, and it was just a 2 TP kind of day. But if you look at this here, you might think not a bad entry. You know, we've had our liquidity sweep, we've had our 15-minute break of structure, the confirmation, we've had the retracement, and we've also had a reaction. To me, that is a good entry. However, my strategy and what I've got written down with me here, I'll find it. We need a 5-minute confirmation plus a continuation confluence if the 5-minute break structure to fill in the 15-minute retracement. So as seen, we break structure off of this candlestick to the upside. So from here, ideally, I get a 5-minute confirmation confluence. Now this low does not get broken below, so technically we're still in an uptrend, even though we've respected it on that 15-minute time frame. And then price ripped, filled it in a bit more, and my entry could have and should have been off of this candlestick closure here, shorts, targeting, probably I would have just placed stops above that body candle there, TP1 for a better risk to reward, and TP2. And as seen, these ones both got smacked. So this was a killer to see yesterday. It was obviously terrible price action, like that chop is disgusting. However, I took a loss when theoretically I could have caught a win. So very happy today to sort of rebound off of that loss yesterday and stick to it anal stiff and just not allow for anything sort of, not even a slight deviation from the strategy. So anyways, that's how I protected myself today. Little sort of a trade recap, but I'm going to be off the charts now, just back testing, working on psychology, coming into London session at 4 p.m. So anyways, hopefully we can catch a trade recap there. I will have a market analysis live in about 4 hours. Until then, ciao. Thank you boys for watching. Good luck in the charts.